Hello, welcome back. I love getting to referee the intense debates that come up when a stock is showing some serious potential in the markets. It's no surprise that stock ticker IOVA has had a phenomenal run, and the BS, cap, and spinning on this thing is absolutely crazy. As always, I choose a couple of recent stock tweets regarding IOVA's biotherapeutics that have caught my attention, and I'm going to share with you my thoughts.
As always, no cap, no spin, no nonsense.
Let's start out with BFunk17, who shared an updated price target that is 3 times from its current share price. I delved a little closer at the share price, or rather share price target, and found that it came from a source that has been, by their own reporting, less than 50% correct. I then decided to check it against the most recent price targets on Finviz and came up with a picture that has it closer to 2x. At one time, it was rated as high as $40 per share, but that has been downgraded, right, into the teens. Make no mistake about it, there is a strong case to be made that the future for this stock is promising, with several positive catalysts on the horizon. One notable event is the potential FDA decision to lift the pause on lung cancer trials, which could significantly impact the company's trajectory. Additionally, the eagerly anticipated cervical cancer data readout, confirmation of insurance coverage, potential upgrades, and rumors of a buyout all contribute to the optimistic outlook. These factors collectively contribute to a strong, positive money flow, with more investors showing interest by hitting the asking price rather than selling at the bids. It seems like a straightforward decision for investors at this point. They're almost looking for a lock it in, right? And then set it trailing stop loss and forget type stock. If you're looking for another big risk, big reward biopharma play, make sure to check out my earlier video in which I looked at CDIO, a biogenetic company that has partnered with Walmart on some pretty impressive leading edge assessments for cardiovascular disease. You can check it out by clicking the link above. Next is Parsnips, who wrote some beautiful poetry when he typed this love note. I slept 9 full hours last night, haven't done that for many months. I'm going to attribute that almost entirely to peace of mind with the decision to go heavy here a couple of months back. I made a few big mistakes market-wise this last year, but Vance is currently mending it all. So grateful to the handful that consistently deliver facts and timely updates, even the funny, solid crew here. This is about to get wild. It's unclear if he meant at 3 months, 6 months, or a year. So let's take a look at how he would have fared during all those intervals. By heavy, I'm going to guess maybe $1,000. Based on the performance at those intervals, he might be looking on a $1,000 position with the following returns. His 3-month return of 139% from $5.31 per share to $12.70 at this time that this video was recorded, right, is solid. His 6-month return of 101% from $6.26 per share would be equally awesome. His 12-month return of 75% from 7.22 cents per share would also be solid. Over that same period, the SPY index, right, returned about 24%, and at 6 months, 12%. Similarly, over that same period, right, Triple Q returned about 16.7%, and at 6 months, 44%. There is no doubt that he absolutely annihilated the overall market's return on this one trade. Absolutely no cap. This man is definitely going to rest well with these solid gains. Next, we have Manor, who cautions us with the potential for a stock offering that is in the works that would send the share price potentially to below $10 again. IOVA's biotherapeutics recent public offering represents a strategic maneuver aimed at fortifying the company's financial position. With a substantial infusion of capital, this company is clearly concentrating on bolstering its liquidity, particularly to support various initiatives, most notably the advancement of its groundbreaking treatment pipeline. This treatment pipeline has garnered attention for its potential impact on the oncology market, right? Understanding the importance of further and substantial investment in that pipeline's development. The offering price of $9.15 per share assumes a pivotal role in this financial strategy. Investors can glean valuable insights by evaluating how this price aligns with its current market valuation and historical prices. A lower offering price may indicate a need for swift capital, right? We're talking about things such as acquiring assets, potentially resulting in the dilution of existing shares. While it could be perceived as setting a ground floor for the stock price, uncertainties, of course, are going to prevail. Amidst these financial considerations that we have to keep in mind are numerous positive catalysts on the horizon, such as the aforementioned potential FDA decision to lift the pause on lung cancer trials, the impending release of cervical cancer data, potential upgrades to the stock's rating, right, and persistent rumors that keep going on about a buyout, contributing to a positive outlook, which may serve to establish a ground floor more than a potential substantial decline. I don't have a crystal ball, ladies and gentlemen. I just don't. But I'm going to call semi-nonsense on that sort of FUD for this particular moment. Something, however, that is not nonsense is a company that made waves with its earlier stock surge. We're talking about Beamer Imaging. It has retraced quite a bit, but this is a short-term correction or possibly a long-term sinking ship. You can check out the video in which I discuss it by clicking the link above. Okay, so looking further at IOVA, we see a very valid point worth addressing, that being its noticeable technical performance. User Porgy Like It made a lot of folks stop and think about their life decisions, right? When he made a post saying the following about a bull flag wedge and its potential meaning. This brings up an interesting question, that being, what the heck is a bull flag wedge and what does it mean for this stock? A bull flag wedge is a special pattern that stock traders look for when using technical analysis. Imagine a flag waving in the wind, but instead of colors, it's made up of lines on a stock chart. The bull flag wedge usually forms when a stock's price goes up. We're talking about bullish movement there. And then takes a short break or pauses, forming a flag. During this pause, the stock's price makes a wedge shape, right? Like a small triangle pointing upwards. This pattern suggests that the stock may continue going up after a brief pause. In technical analysis for stock trading, traders use these patterns to make the predictions about what might happen next with a stock. When technical traders see a bull flag wedge, it often indicates that there might be a good chance for the stock to go up even more. Traders may use this information to decide when to buy or sell stocks. It's like reading the signals in the stock market to try to understand which way the wind might be blowing for a particular stock. Overall, understanding bull flag wedges helps traders make more informed decisions about their investments. As far as accuracy, bullish flags are one of the most reliable and effective sharp patterns. Wealthy Education, a source online, says that the bull flag pattern is one of the most reliable continuation patterns that traders tend to use. Strike Money says that the bullish flag pattern has a successful rate of about 67.13%. Bullish or bearish flag patterns are short-term trends that may last from 1 to 6 weeks. Some studies, however, suggest that a wedge pattern may tend to break out towards a reversal more often than 2/3 of the time. As with anything else, context is key. I call no cap, as you should be practicing proper diversification and stop losses in place. If you like this type of format, make sure to like, comment, and subscribe. Also, share so others can weigh in as well. Remember that all investments carry the risk of loss and that this video and the contents of this video are for entertainment and educational purposes. They should not be considered financial advice. Till the next one, take care.